Hello, in this video I'm gonna walk you through the financial model Excel template. I will show you the main inputs, the core outputs, reports and charts. So let's get started. On the dashboard tab, you may input your core inputs or drivers for the model, see the core financials and core outputs on the charts. So let's set up this model and we will start from units of measurement. We have two options here to set up acreage units of measurement and mass units of measurement. Please note that each yellow cell has its own explanation of what you are supposed to input. It's just easier to navigate across the model and to understand what you are supposed to input here. So let's set up the acreage, for example, in square feet and the mass in pounds. So the next step is to set up your total land acreage by years, for example 5,000 first year and additional 1,000 acres each next year. The next step is to allocate this total acreage by owned acreage and leased or rented acreage. For example 30%, 35, 40, 45 and 50 for the owned. And the rest obviously will be leased. In the next section you may see the absolute values of acreage in square feet based on this allocation and total land acreage. And the next step is to set up your purchase cost per square foot and the rent cost per square foot per month. So for example 10,000 and additional $1,000 will be the purchase cost per square foot, and the rent cost can be 300, 350, 400, 450 and 500. The calculation of rent you may see on the variable expenses, land rent cost. On the assets tab you may see the total owned land amount and the capital expenditure by months in section number 2. And once you set up everything, all the expenses, wages and revenue assumptions, you may review your core financials, the revenue breakdown, profitability, cash flow and the cumulative cash flow charts. On the financial charts tab, you may see your main financial KPIs on the two sets of charts, which is the breakdown of 2 years by months and the breakdown of 5 years by months. So on the top you may see the EBIT amount. The next set of charts will show you the revenue breakdown by products. The next, operating cash flow broken down by cash inflow and cash outflow. The next set of charts will show you the cash balance by months for the 2 years and for the 5 years. And on the last set of charts you will see the EBITDA as a yellow line and the breakdown of this EBITDA, which includes the revenue, COGS and OPEX. On the operational charts you may see two sets of charts with the main operational KPIs. On the left side you may see 2 years broken down by months, and on the right side you may see the 5 years broken down by months. On the top set of charts you may see the juveniles bought. The next set of charts will show you the production in pounds excluding the mortality rate, also by months for 2 years and for the 5 years. And the last set of charts will show you the sales volume in pounds broken down by products for 2 years and for the 5 years broken down by months. On the benchmark KPIs tab, you may compare up to 5 benchmark KPIs with your industry standards. For example, gross margin, the industry standard is 60% for your country or your business, and you may see on this chart gross margin industry KPI is changed, which is orange here. You have also net profit, wages as a percentage of revenue, harvest productivity, pounds per square foot per year, and the acreage, square foot per direct FTE. All these yellow cells, which are industry KPIs, are changeable. Net profit can be 20%, for example, for your industry, for your country. And to the right of these yellow cells you may see the values calculated by the model, driven by assumptions you inputted before on the revenue, expenses and wages tabs. The same information you may see on the charts, which is gross margin, net profit, wages as a percentage of revenue, harvest productivity and acreage, square foot per direct FTE. On each chart you may see the orange, this is industry specific benchmark, and as a blue value, this is a value calculated by the model. On the top revenue tab, you may see the breakdown of your revenue by products and also by years, with absolute values and percentage breakdown. The same information you may see on the charts below. Here you may see the percentage breakdown and absolute values breakdown. Below you may see the revenue depth and monthly run rate chart. You can select the year, and based on this year you will see the information of revenue by products as absolute values and percentage revenue breakdown on the pie chart. On the revenue bridge you may find the main revenue drivers of growth. You may select the first year and you may select the last year, and between these years you will see the waterfall chart, and you may see which are the main drivers of your revenue growth, which specific products grow faster and which specific products grow slower. On the top expenses tab, you may find the breakdown of top 4 expenses categories, and all other expenses collapsed into other category. You may see the breakdown of absolute values broken down by years with the total below, and also to the right you may see the percentage breakdown of these expenses. The same information you may see on the charts below, which you may find the percentage breakdown and the absolute values breakdown. On the couple of charts below you may find expenses depth and monthly run rate for selected year. You are able to change this year, and you may see the absolute values and percentage breakdown on the pie chart. On the expenses bridge you may find the main drivers of expenses growth between these 2 years. These years are also changeable, so you may select the first year and you may select the last year. And you may see that total expenses starting in 2020 will change to total expenses in 2024 by this waterfall. On the break-even tab you may find the calculation of revenue break-even level and break-even chart. For this particular use case, you may find that your revenue break-even level is less than actual revenue calculation. This means that company is profitable. On the valuation tab, you may see the calculation of company valuation based on the cost of equity, which you may input here. Cost of loans you previously inputted on the dashboard. Calculation of resource share you may see here. There's also tax rate, and here you may find the weighted average cost of capital. In the valuation model, there is two valuation methods, which is EBITDA multiple and revenue multiple. You may select one of them, and below you may input multiple of methods. Based on this information, we can see terminal value, which is calculated on unlevered free cash flow. You may see the present value of unlevered free cash flow, NPV, and multiplicator evaluation for this particular company. The color coding in the model is very simple. You may change any yellow cell in any yellow sheet within the model. This means that this yellow cell has some input, assumption or driver which impacts the calculation within the model. Blue sheets means that on these sheets there are some charts, reports and other information which can be useful for reporting purposes. On the tabs without color, you have some extra calculations related to revenue, to debts, equity, inventory and everything which is needed for the reporting. Additionally, you have Contents tab, which allow you to navigate across the model very simple. So you may click on any report and you can go back. It is broken down by reports, assumptions, statements and setup. There is short explanation about what each tab does, but if you want to know more, you can go to How To and to see more detailed explanation of what each tab does and what inputs you may find on this sheet and what kind of outputs you may find on this sheet as well. Any header of this section is also clickable, so you may click on, for example, Book Assets and you go directly to this tab. On the revenue tab, you may see the main revenue drivers. So let me show you how it works. First of all, you have up to 5 different product categories. You may change the names like AAA, BBB, or any name of production you would like to use. You have up to 5 categories. If you don't need, for example, 2 of them, you can just clean these values and you will have only 3 products in your model. The next stage is to set up quantity of juveniles bought by years, for example 500,000 for the 2020 for product A and additional 100,000 per each next year. This is changeable for all other products as well by years. The next step is to set up the conversion of juveniles to pounds of the production, for example meat or fish, and this is obviously after growth period. So for example, 1 juvenile can give you 2 pounds of product A, meat or fish. Then you should input the growth period, means that starting from juvenile to the final production there will be 6 months, for example. This is also changeable to 3 or 8, any amount of months you need to grow your juveniles. Obviously you'll have the mortality rate. For example, for product A it can be 5%, 4, 4.5, 3 and 2. The same idea for another 4 products. The next step is to set up the sales price per pound of the final production. It can be $10, for example, plus $2 each next year. And the final step is to set up the sales period in months after production. If your juveniles go to a final production in January, for example, you can put your meat in freezer and sell it within 2 months or sell it within 6 months. It will impact on your inventory, or if you need to sell it exactly in the same months as it is produced, you can just put 1 month and there will be no impact on the inventory in this case. On the cost of goods sold tab, you may see 6 categories which are already predefined. On the top you may see direct salaries and wages, which are driven by assumptions from the direct wages tab. You may see the calculations in here by months on this line. And you have 5 categories for cost of goods sold for juveniles as dollars per 1000. And on the top you may see the amount of total revenue, total acreage and total production. Below you may see the calculation of cost of goods sold line items by months and by categories, and the breakdown of COGS by line items and months you may see in income statement under COGS section. Here you may see the same categories and breakdown by months. On the direct wages tab, you may input your direct wages assumptions. You have up to 19 categories broken down by 3 sections. Let me show you how it works. So first 5 direct headcounts you can adjust as a parameter, means that 1 FTE per basis, and the basis in this case is per square foot, and this can be 1 FTE per 200 square foot, or it can be 1 FTE per 150 square foot for the type number 2, and depending on the acreage you will have the calculation of direct employees here. Also, you can set up the annual salary per 1 FTE, which can be, for example, $20,000. You can input annual salary rise, 5% for example, per year. Below you may see the calculation of annual salary depending on base salary and depending on annual salary rise. You have also monthly bonus, which can be 10% for example, and the tax rate, which is payroll tax, for example 20% or 12% in this case. Below you may see the calculation of staff numbers or headcount numbers, salaries, monthly bonus and monthly base taxes. The next category or type is to drive your direct headcount as a parameter per pounds of production. Means that per 10,000 of pounds production you'll have 1 FTE. Again, you can set up salary, salary rise, monthly bonus, payroll tax rate, and you will see the amount of headcount which is needed depending on the production driven by the revenue assumptions. And the final tab in this case is to set up your direct headcount as just hire date, for example February 20, fire date can be the last date of the model, and the basis is manual entry. You can set up the salary as well, $10,000, and you can adjust numbers of direct employees manually, 2, 4, 6, 8 and 10. In income statement under COGS section you may see the direct salaries and wages calculation, so it's a part of your cost of goods sold. On the fixed expenses tab, you may input up to 15 line items for your fixed expenses. Let me show you how it works. For example, you have utilities. You will start pay starting from March 20 till the end of the model, which is December 24. You may see it here. Let's pretend periodicity will be daily with amount of $50 per day. So you may see these amounts in here. It is calculated based on count of days within this month. So obviously in March 20 you have 31 days. That's why you will have 1550. In April you have 30 days. This means this will be $1500. Also you have ability to input some growth rate year over year. Once you input this growth rate, you will see that your utilities will grow over year. Let me give you a couple of other expenses types. For example, advertising. let it start in March and finish in August 24. This will be on weekly basis with amount of $100 without any growth. So starting from March till August 24, you have $400 per month, which is 4 weekly payments each month. And that's it. Another option is bi-weekly, for example, $500. You can start from July, for example, and you'll have 2 payments, which is 2 bi-weekly payments within the month. $500 multiplied by 2, you have $1,000 per month. Again, you can input some growth rate, and you will see that your advertising expenses will grow year over year till the August 24, which is the last date of this expense type. Another option, office setup, which can be one-time payment, which will happen in February 20 with amount of $5,000. Obviously, you should not input any growth rates because this is just one-time fee, and you may see that office setup will happen in February 20 with this amount. Another option, insurance, let it be start from January 20 till the end of the model, and it can happen monthly with $1,000 per month, with 5% of growth first year, 3% of growth second year, 2% of growth third, and 1% year number 4. So you may see this calculation here. Starting from January 21, it will grow for 5%, which is $50. And starting from January 22, it will grow for 3%, which is additionally $32. Another option, quarterly. You may see that insurance will be paid $1,000 each quarter. You can start it, for example, from February, and this will be shifted to 1 month forward. Another option, semi-annually. In this case, you will have insurance payments once per half a year, again with a percentage of growth. And the last option is annual payments or yearly payments. You'll pay one time per 12 months, starting from February till December 24. For each expense type, you can use growth rate, and the calculation you may see in here. Also, in income statement, you may find total fixed expenses group. If you will ungroup this section, you can see these amounts broken down by months and by fixed expenses line items. On the variable expenses tab, you may see the 6 categories of variable expenses. The first one is land rent cost, which is already predefined by assumptions which you input on the dashboard, and the calculation of land rent cost you may see in here. The next 5 categories are changeable, so you may print something here, for example variable expenses other category or something like that, and you have different options of how to calculate that. For example, feed can be calculated as dollars per 1,000 juveniles per month, which is $300. Water and power can be calculated as dollar per square foot per month, and you have 2 options to calculate variable expense as a percentage of total revenue. For example, other can be calculated as a 2% of your revenue. On the top you have the main drivers, which is total revenue, total acreage, and total production in pounds. And on the bottom you may see the calculation of these categories by months, and in income statement tab under variable expenses section you may see the breakdown of these categories by months. On the admin wages tab you can set up to 19 categories for your admin staff. Let me show you how it works. For example, managers, this hire date starting, for example, from February 20 till the end of the model. You can adjust annual salary per one headcount, can be, for example, $40,000. Then you should input number of admin employees. Let's pretend in the 2020 it will be 1, then 2, 3, 4 and 5. Then also you can input annual salary rise. So for example 3% of annual salary first year, for next, 5 and 6. Also here you have set up for the monthly bonus, for example 5% per month, and the payroll tax rate, for example 12. Below you may see the calculation of annual salary, depends on the annual salary for the base year and for the annual salary rise. Also here you can see the calculation of number of headcounts. It starts in February because we set up February start of hire. Here you can have monthly base salaries, monthly bonus calculation, and monthly base taxes, which is payroll taxes. And under income statement you have total admin salaries and wages section, where you may see the breakdown of all your headcounts categories and the breakdown the values by months. On the CAPEX tab you may input up to 20 development expenses categories. Let me give you a couple of examples. So for example office development with purchase date of February 20 with spending of $10,000, and you also can input payment delay. What does it mean? Let me set up 2 months for example. It means that this amount will be accrued in February because of purchase date is February, but paid development expenses will be in April 20 for this office development. And you will have some balance of CAPEX accounts payable for 2 months. Let me give you another example. Other development expenses. Let's say March 20, $5,000 with 0 payment delay. This means that this amount is accrued in March and paid in March as well. The total amount of development expenses you may find in Assets tab. By default it has useful time for 5 years for the calculation of depreciation. You may find calculation of depreciation for development expenses in here. Here you may also find capital expenditure and closing net book value. Additionally, you have up to 6 placeholders for other assets, for example other assets with useful time of 10 years with cost of $25,000 and with launch date in April. You may find it in here. You can see capital expenditure, you may see book depreciation by months for these amounts, and you may see closing net book value. The total amount of depreciation you may find in income statement. On the cash flow you may find cash flow from investing activities for these assets, and on the balance sheet you may find fixed assets amount under non-current assets and CAPEX prepayment and CAPEX payables as well. Also on the top of the dashboard you have debt assumptions. Let me show you how it works. So for each debt you are able to select the debt type. There are 2 debt types in the model, which is annuity and usual. Annuity means that each monthly payment, which consists your debt repayment plus interest expenses, will be equal each month. In case if you will select usual, your main debt repayments will be equal parts and interest will be just interest on the debt's closing balance. Let me give you an example how it works. So you may input some amount of the debt, the launch date, term will be 60 months, and interest can be 5%. You may also input the grant, which is just simple amount, which is paid in some specific months, and that's it. no repayments, no terms in terms of interest. So all the calculations of the debts you may see on the capital tab. Calculations for debt number 1, debt number 2, debt number 3, total debts with grants. These calculations impacts income statement, interest expenses, the cash flow, interest paid, debt drawdowns, debt repayments, and on the balance sheet you have the debt closing balance. On the capitalization table you can input different founders and investors' contributions, broken down by different dates of funding with different cost of share for each series, and you can see the dilution of shares after each round, and pre-money total equity and post-money total equity. Let's pretend that we have two founders, founder 1, founder 2. So total amount of shares for founder 1 can be 10,000, for founder number 2 20,000. Let's imagine that cost of share will be $2 and the date of founding is February. This means that investment for founder 1 is $20,000, for founder 2 is $40,000. In total they invest $60,000, which you may see here. The dilution is 33 to 67% of shares. So let's pretend that for Series A we have one investor and the date of issuance is May, cost per share is $5 per share and number of shares is 1,000. So total amount of investment will be $5,000. You may see that before the Series A total equity was $60,000, after is $65,000, and investor 1 will have 3.23% of shares, and the shares of founder 1 and founder 2 also diluted, 32.26 and 46.52%. You can also input some amounts for Series B and Series C. The same way you can set up the date, cost of share, and up to 5 investors is up to 5 placeholders for number of shares. The amounts of funding you may see in the cash flow, in the ordinary equity risings, and you may see the balance sheet, which shows you the total equity by months. On the top of the dashboard you have currency denomination and taxes setup. So currency inputs means that you can input all your drivers for the model using one currency. You have currency outputs. It can be the same as currency inputs and it can be different from currency inputs. So let me give an example. When you input in United States dollars, you have euro as an outputs, and for this case you can set up currency exchange rate. This is 1.2 for example. In this case you will have in the model all your inputs in United States dollars, all your outputs in euros, and there will be conversion rate between currency inputs and currency outputs. Additionally you have denomination, which means that you can denominate all your outputs on the reports. In this example we have denomination is 1000, means that your outputs is denominated by 1000. You can select millions. You may see that now it is in $1,000,000. You can set also billions or without any denomination. Additionally you have corporate tax setup. You can change this number and this will impact tax expenses in your income statement. I hope you enjoyed my video. Thanks for reviewing this. You can find more on my website finmodelslab.com, and we'll see you later in the next videos.